In recent years, the U.S. economy has faced a series of challenges that have left many questioning its stability and direction. The notion of an anchor economy typically refers to a robust economic system that provides stability not just for itself, but also for the global economy. Unfortunately, the U.S. economy, once viewed as the world's economic anchor, seems to be losing its grip. Several key factors contribute to this perception. First, we need to address the growing national debt. As of 2023, the U.S. national debt surpassed $31 trillion. This staggering figure raises concerns about the sustainability of our economic policies. When a country's debt reaches such astronomical levels, it risks losing the confidence of investors and international markets. High debt can lead to increased borrowing costs and ultimately slow economic growth. Next, let's consider the persistent trade deficits that have plagued the U.S. economy. Trade deficits occur when a country imports more than it exports. For the U.S., this has been a chronic issue, with deficits averaging around $50 billion per month in recent years. This imbalance not only affects domestic job creation, but also signals to the world that the U.S. is consuming more than it is producing, raising concerns about long-term economic viability. Another critical aspect is the shifting geopolitical landscape. The rise of economies like China and India has introduced new competition for the U.S. This competition is not just economic. It extends to technology, manufacturing, and even influence on the global stage. Countries that were once seen as emerging markets are now vying for a larger share of the global economic pie, often at the expense of traditional powerhouses like the U.S. Moreover, the U.S. is grappling with internal issues such as income inequality and a declining middle class. The gap between the rich and the poor continues to widen, with a significant portion of wealth concentrated in the hands of a few. This inequality hampers economic growth, as a significant portion of the population has less purchasing power. The middle class, once the backbone of the American economy, is facing stagnating wages and rising living costs, leading to reduced consumer spending, which is vital for economic expansion. Additionally, the labor market is undergoing significant changes. Automation and artificial intelligence are reshaping industries and eliminating jobs. While technology can drive innovation and efficiency, it also raises concerns about job displacement and the need for a workforce that can adapt to these changes. The U.S. education system faces challenges in preparing individuals for the evolving job landscape, which may further exacerbate economic disparities. We must also consider the effects of inflation. In recent years, inflation rates have surged, driven by factors such as supply chain disruptions and increased demand as economies rebound from the pandemic. While a certain level of inflation is normal, excessive inflation erodes purchasing power and can lead to economic instability. Central banks, including the Federal Reserve, face the difficult task of balancing interest rates to combat inflation without stifling economic growth. In addition to these challenges, the political climate in the U.S. has become increasingly polarized. Political gridlock can hinder effective policymaking, making it difficult to address pressing economic issues. Investors and businesses often seek stability, and uncertainty stemming from political disputes can lead to reduced investment and slower economic growth. As we look to the future, it's clear that the world cannot escape the implications of a U.S. economy that appears to be losing its anchor status. The interconnectedness of global markets means that disruptions in the U.S. economy can have far-reaching effects. Countries rely on U.S. investment, trade, and economic leadership. If the U.S. falters, it could trigger a domino effect, impacting economies around the world. By recognizing the challenges and committing to proactive solutions, there is potential to regain its status as a global economic anchor. The future of the U.S. economy, and indeed the world,